I'm muted, right? There we go. Good morning, guys. How we doing? Late, unsubbed. Oh, thank God I got rid of Bob. Winning. What's up, little G-Wagon? Before Carl? Oh, I'm not getting involved in that. That's awkward. Why did RC move the hot tub stream? That's a good question. Thanks for reminding me in an hour. Yeah, no problem. I mean, I simply woke up an hour late. That's what happened. Chris, welcome to Dillionaire, man. Thank you so much, dude. Hit me up on the Discord if you need me to get you added to the country club. Why do we still celebrate daylight savings time? Because of the farmers. When market poopies? That's a good question. Biden came out strong over the weekend and said a whole bunch of shit that's probably going to rocket the market tomorrow. Now, why would he do such a thing? I don't know. But he signed the budget agreement. He said the Fed is he's pretty sure the Fed's cutting rates. Wink, wink. Um, he has calls, maybe. What kind of FINRA extension should we expect for daylight savings? Everything's due an hour earlier. He's deep in the money on the video calls. He's probably out of the money. He bought 900s on Thursday, and he's like, "This is bullshit." I had an emergency Friday and missed the afternoon Bearfest. I had the outfit and everything. I'm sorry. I'm just really happy that I called the exact top of the market a week in advance. That was, I mean, I guess it should be expected at this point, but what did Nvidia dump? Was that just straight share selling or options? It was an awful lot of volume. I can take a look at the well, can I? No, I can't. Not yet. JFresh is in flux right now, so I don't have March 9th data yet. But maybe I will at some point during this stream. Where did you call it? 5188. Like I don't know, like a month ago in the technical charts, and then Thursday night. Well, last week and then Thursday night. I meant hot tub stream, pickles picks, regular stream, all of them. Turns out Nvidia is overvalued. That sounds like some fucking shill talk. Someone getting out ahead of the news from Nvidia's earnings not yet to be earned. Possibly, yeah. Could have been margin requirements. volatility moved substantially higher, right? Um, so it might just be like the effect of us seeing more deleveraging, right? We've been seeing pretty consistent deleveraging over the last like week and a half now. What do you think the local bottom is going to be? I have a feeling we're going to pump pretty hard tomorrow. Um, I mean, I'm not kidding. Biden said like every bullish thing he feasibly could. If that doesn't turn the market around, this thing's gonna dump like fucking crazy. Then we have CPI on Tuesday, right? Mm, is it Tuesday? Yep. Yep. CPI is on Tuesday. What about BNED? I don't think we've gotten any information on their earnings yet. No. Earnings are still just delayed. They filed something? Mm, did they? They filed a thing to reschedule their March 7th earnings on March 7th. They're going to issue a press release to announce the new date. And that's all they've got on their investor relations page. BNED filing made it seem like they were hurting for money. I think their cash flows should be substantial enough to sustain the core business. They're probably going to want to issue some debt at some point if they're capable of it. They have a debt problem. I mean, they have a lot of debt. That's why they're 90 cents. The question with BNET is, can they turn that situation around? Um, we will see. But the thing that everyone was like harping about in the filing is that's just like a standard uh like risk disclosure. Uh, that's pretty common with, you know, near near bankrupt companies. Nvidia dumped because the huge call position rolled out from May to June. So MM probably felt they could drop their hedge a bit. Which huge call position? Selling college books in the 2020s is like selling cigarettes in the 60s. I don't know if it's quite that good, but it's a decent business. What's down to 76 cents in after hours? BNED? Oh shit. Yeah. Looks like it's bouncing back. Hold on, I'm trying to see something. Yeah, which call position rolled? The fucking 900s. That's the only thing. I mean, what happened was all the fucking calls sold off. Like everything from like 845 to 900 sold off hard. And Gamma completely flattened out. Do you plan on discussing beyond and what the dry up and short liquidity might mean now that we didn't come off reg show? Hmm. That could be bullish. If it starts to turn around, it's very bullish. So, I mean, this may have been like kind of the final push to get their like $8 calls and stuff out from underwater. We did dip under $8 very briefly, um, for I don't know, like half of a trading session. Uh, we started going back up again on Friday. We see liquidity starting to turn a bit around. So they may have been pulling back short positions there. And then now that we're still on reg show, we still have forced covering, we may start to see incremental price improvement day over day. On big ETF FTD days, we might get some spikes like this, and then just gradual increase over time as they clear out the rest of the ETF FTDs or the FTDs in the underlying. You can kind of see this back here too. We had a very similar situation. We got a big spike in price improvement. They kind of shorted it back down to where their short calls were, right? And then we started to get more consistent covering. And then that bled up until we got off of reg show, like over here. So this time around, earnings obviously offering a much bigger surprise, but having a run like this while on reg show is pretty fucking bullish, right? This definitely puts you in a situation where like you're creating a ton of FTDs in order to get the price back to spot, right? So you have to use this is all like synthetic liquidity, right? Because you don't really see a change in borrow rate here. If you're using borrows on the underlying, your borrow rate's going to go up. So this is all just ETF liquidity, and but it's happening while it's on reg show, right? So that really narrows your timeline, because when you're creating FTDs on reg show, then you only have like 13 days to cover them, right? So you're creating a situation where out here on May 18th or March 18th, you've got a shitload of covering due. Well, March 18th and on, right? And that's kind of what happened back here in the last reg show cycle on beyond, right? Was they got this big spike and they had to short it back down with synthetic liquidity. Now this whole period was on reg show. And then once we got out about 15 days from that initial spike, and then the second one, right, we start seeing covering pick up. Because now all of your new failures are coming due sooner. You don't get to kick the can on them like you'd got to previously. And then you still have your ETF FTDs coming in at the beginning of each month, right? And so this kind of kicks off really hard once the ETF FTDs catch up. Between like what was it, like December, I guess it was Jan 1, December 1. So it's like December 1 here through the 7th, right? Which is your like T plus 6, right? And then you finally get a short again right here. That's on the 7th, so that's after the ETF FTDs are done covering, right? And then this was the rest of the covering that occurred, and then I think it came off of Reg Show like right around there. But that's kind of, I'm expecting a similar situation. So like 15 days, March 18th or so, we should get like another little spike. That should get shorted back down, then another spike back down, and then we get our ETF FTD covering into the beginning of April. And that should, provided it stays on Reg Show the entirety of that time, but yeah. So that's kind of what I'm thinking. And if you look out here, on the previous two cycles, like most of the bigger covering was kind of done in this range. I mean, this kind of gives you like a little bit of observational bias, right? And then we're still kind of dipping into that, and this is where we're going to see that ETF FTD covering, and then back out of Reg Show. Now this could be more violent, right? Because we ran so fucking hard while on Reg Show, like right before that forced covering period, the stock ran really really hard. This was significantly more volume than say like this or this one, that had been prior runs while on Reg Show. Let me see if I can circle those so you can see them a little better. This one and this one. And yeah, this earnings is massively larger, right? So it's like earnings fell right in that period, and yeah, that really kicked things off. So that's where you start to get those compounding fails. Anyway, I'm ruined. BNAD, it'd be fine. I bought back my CCs on GME. I made like $20. I used a free trade violation. I'm really not sure it was worth it. Do you think we see price improvement for earnings? I mean, GME should beat earnings. I don't know if they'll beat the analysts' expectations, but they should have positive EPS and better revenues. Quarter four is historically their best quarter. I will say it doesn't look good for a run. Like, um, there's a lot of liquidity in XRT right now. I would say that if we beat earnings and we spike, we'll probably see XRT get reg showed. And then, you've got another 2 or 3 months before a run. But there might be a spike at earnings. Rate cuts are bad for Upstart and Affirm? Yes? No. Incorrect. Rate cuts are good for Upstart and Affirm. Very good for them. It creates intrabank liquidity in the credit markets and allows them to push off their loans onto other people. They're not really in the business of being a bank. They don't want to carry those loans, right? They just want to facilitate them, and then they want to sell those loans to other people. Other people can manage them, right? They don't want any part of that. The more loans they're carrying on the books, the more debt, and it tends to weigh on their valuation metrics pretty hard. Upstart's got a little bit more padding there since the like Castleview deal, but they would prefer liquid credit markets. You want to lend a lot. You don't want to lend a little at very high rates, right? You want to just be lending all the time, especially for issuers like them. It's all about volume. It's a volume-based business. The lending at a higher interest rate isn't great, right? Because the number of people that you can safely lend to shrinks dramatically, unless you're going to lend in a predatory fashion, and everyone's well aware of that and cautious of it, right? And then that's gonna be where you run into issues with interbank liquidity, because no one's gonna want to pick up your toxic assets, right? Like if you're given $50,000 at 25% to people who make 30 grand a year, it's very unlikely that a bank's going to come in and want to buy your loans. Well, DMU screenshots you can see. Okay. PT changing from your initial 12 to 15 on Upstart? I mean, or on Beyond? No, not unless. I mean, so as Beyond gets more bullish, we should see Gamma Max pull in closer to price. And that's going to limit the total upside range. So if this starts getting more bullish, Gamma Max should get closer to the price, which means that 10 to 15% above Gamma Max will also be lower than it currently is. Usually Gamma Max is furthest out of the money as the price is dropping. Gotta hate Jimmy nowadays. It's perfectly reasonable. How fucked is Fubo? I don't know if they're fucked. I mean, they're very liquid. That doesn't mean there's a lot of short sellers, right? I don't know. I'd almost be, if I was a short seller, I wouldn't want to short this at $1.60, right? We're not seeing liquidity dry up really fast. We're not seeing shorts be super aggressive or anything. We did see some selling in the underlying post earnings. Some people are getting out. Definitely, obviously the situation has become riskier, and that's going to see some institutional interest flee. It'll probably also see some institutional interest pick up. But imagine this scenario: you're short Fubo, a few 100,000 shares, and the judge in their case grants an injunction, or the DOJ moves forward, or the FTC moves forward with charges against Disney and Fox, right? That's not a situation I'd want to be in as a short. It's completely unpredictable, right? And it could squeeze out the entirety of your position like that. So I don't think we're going to see a lot of shorts on Fubo, which means at some point we should probably get a bit of a turnaround. We're a little bit below the 175 resistance, but we seem to be holding there. Can you comment on the possibility of parallel universes and how they make you feel? Is there a university where you aren't a bearded love boat? No. It's pretty much true across all of them. Although I'm happier in the one where they didn't kill Harambe. Amazon buys them. Yeah, a buyout is a risk. But I mean, as a short, I would be more afraid of the legal side, because it's very unpredictable, right? What about that universe where you went dress shopping with Dork? Oh, that was you mean last week? Greek being born as a majestic Persian centaur is a canon event. Uh, anyway. Yeah, I don't have much else to say about the memes. AI still kind of looks like shit. Upstart was getting a bit of a got a little bit of a bump with that huge run up in Nvidia, and then that kind of started coming down as Nvidia dropped. I think a lot of that's still just pressure on bots. Upstart's pretty liquid right now. I think there's a little bit more room for it to get shorted. But if we start to get, more rate cuts, or more speculation that rate cuts are coming back, we could see Upstart run a little. Right now, I mean, we're still basically pricing in 3 rate cuts for the rest of the year, so I don't think a lot's changed. AI crypto gonna rock it out though. Uh, Upstart pumpies with that Biden bull speech. Maybe. Yeah, maybe get a continuation. Banks, 5% of the 10-year. Still Damocles sword event. Yeah. Yeah, 5% on the 2-year is still a big risk for them. True says tomorrow's the end of BTFD. Yep. Something like that, saying banks are going to be crazy. Are we going to see that right away? I mean, we'll probably see banks move into the discount window right away for liquidity. I mean, you're only talking about like 168 billion currently on loan at the facility, or 163 billion. This is one of those two. Discount window is about matched to that already. So I don't think it's gonna cause a lot of disturbance. Their at risk assets currently are fairly safe unless the 10-year yield starts moving up again. Yeah, well, we might see the market come back hard at least one day this week. Biden definitely promised the market the world over the weekend, so I can see that being construed as pretty bullish. Than CPI, right? CPI doesn't necessarily have to have a negative effect, but it's probably going to be hot again, right? Still no easing in shipping costs or anything like that. Um, but I think maybe the real damage comes with PPI on Wednesday, when PPI is also hot, because that's going to affect margins, right? Sales are already slumping, so I mean, having higher producer prices during a sales slump is bad. So far, even despite lower sales, companies have been able to maintain higher margins by selling less for more. Um, but this isn't something that you can do forever. This only works as long as the consumer is extremely resilient. Um, or the consumer is carrying large amounts of credit. Right now, consumers are carrying large amounts of debt. Wages are starting to dip, and unemployment's picking up, and that's not going to add to the resilience of the consumer, I don't think. No problem, Brinky. You think Biden will have an impact? The market hasn't cared much previously. Yeah, it has. Nvidia mess DM to you at your leisure. Okay. 26,000 contracts. Could just be a collar. Looks like a collar. I mean, they're definitely not bot calls if the market maker reaction is to dump their hedge, right? It looks like a big collar. Where's the... There's got to be other legs to that. Or this is the ETF, or the hedge for the ETF, selling the short calls. NVD, whatever the fuck it is. Yield max. Their assets under management have like quadrupled over the last few months. Did you take a look at DSX? I piled my profits into that. Looks like a shipping company that's recently gone positive fiscally and trades at a nice level. What is it? DSX? Mm, 66.8 million shares. Positive is a strong word. I would say not negative. Payout ratio is unsustainable. Revenues are declining over the trailing 12 months. Gross profits down. Although annually they're starting to catch up. Operating income. I assume the operating expenses are largely their lease, right? Fuck, man, look at that. They're spending $50 billion a year in or $50 million a year in debt. 12 million a month. That's a fucking fat chunk of their money. $105 million shares outstanding. $0.15 a share, 7 cents a share there. So in the last 2 years, they've increased their float by about 20 million shares. 30 million. I mean, it's pretty terrible, right? Like their liabilities are a huge fucking issue. And that I don't know if they have any refinancing, but I'd look into the schedule for their debt because if they have shit coming due that's gonna be need to be refinanced, that's gonna be really bad for them. On the bright side, they do own about 40 dry bulk ships. Do they actually own them, or are they simply leasing them? Is it like Zim? Someone trying to say 500 million in spending won't have an impact. Probably the only thing that'll help DJI trade flat after the PA news. Yeah, Boeing's still getting fucked in the ass by every three-letter agency on the planet. What does a healthy correction on SPX look like? Uh, Anywhere from like 4,700 to 4,100. I guess we could see that lower. Yeah, maybe like 4,525 to 4,100. Hmm. Is AMKBY a good entry, or are they bleeding the company with the dividend? I don't think they're bleeding the company with the dividend. The dividend wasn't even all that substantial this year. And we do have it coming up soon. 24 cents a share, which isn't bad. I mean, but I think the price is decent. It's found some support. I bought back in a little bit. I picked up like 10,000 shares when it went under 7. Um, I still don't have as many as I had prior to the big bump from the Red Sea shit. But I would say if I start seeing things heat up more in the Middle East, then I'll increase my ownership at these prices. If it doesn't, I'm pretty happy with what I've got right now. I already made like 30% off of it this year, so I don't think the DEA yet, but maybe once they start investigating management. A healthy correction by filling the 20 gaps below us. Yeah. My buddy owns 1.5k of GLD and has no clue about selling CCs. He's a firefighter for Virginia State Forest and makes no money this time of year. I sent him your way. Congrats on one new follow. Oh, okay, cool. Tell him to pick up a copy of Options as a Strategic Investment. Can you talk about what you look for when you're entering a trade? I'm struggling to time entries correctly. I don't know what trade. I mean, there's so many variables that I'm not going to be able to give you very good information on that unless you've got a more specific question. I definitely don't have any data on it. Danish Energy government owns 50%. Uh, that could create some risk of seeing the dividend pulled back. Oh, Danish Energy, Orsted AS. Looks like it's down similarly to other utilities. No dividend payouts. They've already cut the dividend. That might actually be in a pretty good position. I would keep an eye on how much of their debt they're paying off. How are their cash flows? Ooh, cash flows are rough. Yeah, their revenues have been declining really, really fast. I wonder what happened there. Interest expense. God, their interest expense is insane. Um, yeah, I mean, right now their interest expense is most of their fucking revenues, right? Um, yeah, they definitely have a lot of risk with their debt. I would say I would say we're seeing that debt, like those total liabilities, reduce pretty substantially over the last, well, just the last year, but down 3% from where it was in 2022. But at the cost of their free cash flows and their revenues, right? Like they're accruing more debt in their attempt to pay off debt, which is not not a great spiral to be stuck in. So I'm not a big fan just based on that, but you can do more research into them, I guess. I'm not looking into Otis. You want to use it as a savings account? Don't use stocks. Stocks aren't a savings account. That's what treasuries are for. Or money markets. Me watching SMR claw themselves out of their short apocalypse. I really appreciate your long-term plays. I do consistently well on those. Nice. I try to sprinkle in a couple here and there. Some of the ones I enter, like AMKBY, I'll deem as like, or PBR, I'll deem as like a little bit too much risk. And I won't necessarily write about them, but if I think they're lower risk, I'll add them. I don't know if you guys want me to put the higher risk long term plays in, but I guess I could. Just maybe make a longer footnote on how risky they are. This may sound crazy, but I'm targeting 506. I don't think that's crazy. My next buy-in's at 620, I think. Hold on. I have it marked. It might not be 620. At 594. And then 507. So yeah, they're pretty close there on that bottom one. But yeah, I don't disagree. They're definitely could do better than Zim, right? Zim still doesn't own any of their own fucking ships. Maersk is huge. They're almost too big to fail. Can you go for PBR when you have a chance? Yeah, they dropped the dividend a little bit, which is kind of to be expected, but and there's been a lot of political pressure for them to do that for about a year now. So I'm not super surprised on the dividend drop, but that I think that opens up more room for growth, especially with positive sales in the last quarter. I think I still think PBR is pretty undervalued, even factoring in the geopolitical risk there. Um, the fact that it's trading at a forward PE of 4 is ridiculous. It's pretty resilient to market drops, so it's not like something I mind holding for a long period of time. If I get it back in the $9-10 range, I'll probably buy back in. If the powers that be in the government change in the next election in like 2 years, we could see that dividend and the special dividends come right back. Because they want that foreign investment capital, right? And the more left leaning Brazilian government doesn't really, they don't really want all of that money flowing out of the country, which is understandable, right? It should be getting distributed into the country a bit. But the more right leaning party is definitely in support of attracting foreign investment capital, and to do that, they'll raise the dividends, right? So you probably have a little bit of back and forth, but I don't mind. I don't mind the dividend cut. I think the current price isn't too bad. Um, it might sell off a little bit more. Might see it move down to around like $10 or $11, but oil's been pretty resilient, right? We still have a lot of OPEC cuts. We still have conflict going on in the Middle East. Even though the U.S. is supplying a lot of oil, we may not continue to do that forever. And they do have a lot of exposure to crude prices. I don't the thing I don't like is their push towards green energy without, you know, giving any kind of substantial carbon credits or anything like that. Um, but I feel like a lot of that's being done just to allay fears from the current government regime, and that not a lot of it's going to actually be implemented. I mean, they have the cash flows to withstand a higher rate situation. Would beyond 15 Cs for May or SPX 4700 Ps for May be more appropriate for bonerific gains? I don't see any reason to buy SPX 4700s unless we're below gamma neutral. Beyond 15 Cs, I mean, I think they're too far out of the money. I don't think I'd buy a call above $12 right now. Oh, I don't care about shipping as much as you do, man. Why does RC move daylight saving stream? He didn't. Are you prepared to get a lot more crying? I mean, yeah, that's kind of why I don't, right? Usually the higher risk shit is like penny stocks and stuff. Can you look at Boom? Ugh. Hmm. What about them? Revenues are consistent. They're getting their debt paid down. Cash flows are improving a little bit. Nice small float, but that's going to make it more volatile. It might be in decent long. Prices are pretty low. Any thoughts on top? I mean, no, they've it's illiquid, so it's been running a little bit. They've got to announce their plan before the end of the month. The NYSE is going to delist them. Supposedly they intend to. I think that's about it though. I bought calls on it because it's like liquidity is getting about as low as it can. This is kind of where it peaks out, right? So, and it's starting to like turn around here. Um, they might have to just cover anyway because they've been waiting so long. Uh, and then there's synthetic liquidity that's going to need to be dealt with there. But at some point during that covering, Top should announce some of their guidance. What happened to the carry trade if BOJ raised rates, then the Fed cut rates? There'd be a lot of volatility. The Fed would have to cut rates dramatically because remember, because Japan's rate is 0, an increase to positive is percentage wise is significantly more impactful than like the Fed cutting rates by 0.25. because what you're dealing with the BOJ is you're dealing with a lot of leverage against that rate, right? So like $100 loss in the underlying security value might be $10,000 loss in the position. If you're leveraged, let's say like 1 to 10, right? Every $1 loss in your underlying securities that you're leveraging up is going to be a $10 loss in your leverage. And so, if your underlying security drops, say like 50 cents, right? So you lose 50 cents on the dollar. Uh right, so you have a dollar, you borrowed $10, you're leveraging $10 against that dollar, and then this goes to zero, or it goes to 50 cents rather. Now you can only leverage $5, and you have a loss that you have to deal with of an amount 5 times greater than your initial leverage, right? Because your loss is, you've lost $5, but you only had $1 to begin with. And so, I mean, that's just an easy way to think about it without trying to think about it at scale. But yeah, a rate change from the BOJ from negative to say positive 0.25 is huge. It's a huge effect on any leverage that's been placed against that negative rate. I've been playing around with Walmart lately. What are your thoughts on the pricing going up at unemployment and inflation increase? As far as it affects Walmart? I mean, a weaker consumer and higher inflation's not good for retail, but Walmart mostly is mostly selling like consumer durables and like products that are like a core expenditure, right? Like food, toilet paper, things that like people can't live without. Um I would say Target and like higher end, like Costco and Target are probably far more impacted by like less discretionary spending than Walmart is. I mean, as far as this like that sector goes. Billy, how's it going? Hope you're having a great day. Not bad. I'm gonna see if J Fresh and Dork are around. Where's my headphones? Hold on. What's up, Dork?
How you doing?
Hanging in there.
What's everyone talking about?
People are asking me about all their shitty investments.
Oh, nice. Yeah,
Yeah,
yeah.
well, I wanted to
I'm
end
not
that as
into
quickly as possible, so I
it.
figured I'd see what you guys are doing. Have you heard from the cat yet?
I have not heard from the cat.
I know he's traveling, but I don't know if he's joining us or not. He said he was going to.
Is he traveling with his kids?
No, I think he's got work shit going on.
Okay. Well, then he may. He may. Unless he's been in a band.
So we got a bunch of stuff this week. Um, I don't want to. I'm already running late on the stream, so I definitely don't want to spend all day talking about every possible macro situation. But did you hear Biden's comments over the weekend?
No, I did not.
Oh, so his big like economic takeaways were the U.S. is the envy of the world, and strong job growth and resurgence in U.S. manufacturing, which actually isn't untrue. Um, he's extending price negotiations on 500 prescription drugs, capping drug costs at $2,000 a year for all Americans. Proposed a $400 a month tax credit for home buyers uh,
Ooh,
for
can I get
two
that
years.
retroactively?
Yeah, you should be able to.
Ooh, fuck yeah, nice. Fucking A.
While eliminating title insurance on home purchases, which you're not going to get retroactively,
Damn it.
and pledging not to raise taxes on taxpayers earning 400,000 or less. But he wants to extend tax cuts that are expiring in 2025. And then he made a bunch of comments about the Chips and Science Act, creating like 800,000 jobs that pay more than 100 grand a year and don't require a degree. I think he said that what was the hold on, there was more. Oh, he
So
said that
basically,
he said that the Fed is he feels that the Fed is very close to cutting rates. Um, he signed into law the extension for the government spending for $460 billion. I think that's everything, but it was a lot. It was a lot of shit.
he basically said deficits to the moon.
Yeah, we're gonna spend our way right out of this bitch. So I feel like that that's probably gonna have a really positive effect on markets tomorrow, because he said just about every bullish thing he could say about every single sector. I mean, pharma will get hit a little bit with the drug negotiation stuff, but they talked about adding more money to the Chips Act. Um, so that could see, Nvidia, Intel, and Intel's a bigger beneficiary of that. So is TSMC, but um, you know, just because Nvidia, we could see Nvidia run off the back of that. We could see AMD go up, maybe even like Microsoft, Meta.
Well, like I've said before, pretty much anything short of Sam Altman getting investigated for fraud, Nvidia is just going to go up.
I mean, the tax credit thing kind of tells me that people are very close to being at risk of losing their homes, and he's lowering people's mortgage payments, like in a very direct fashion.
Oh, the mortgage tax credit.
Yeah,
So is that just going to
it's
be
a
like a
property. It's like a property tax credit.
so is that just going to be like a yearly thing? Like on my yearly tax assessment, I can get that refund.
I don't know if either that or your lender is going to apply for it on your behalf
All right. Well,
and
if
just
that's being
reduce your monthly tax payment.
so here's what's great about me buying a house, and I just realized this. We have a limitless supply of content now between Jay Fresh's pool and my fresh new house.
Your yurt, you mean?
Oh yeah, the yurt too.
How's that
Yeah. So
coming along, by the way?
well, I still haven't received first and last month's rent, so all I could afford right now is the plywood.
Okay, that's good enough.
I was
Let me
just
know
gonna
when
like
it's livable, and then we'll discuss deposits.
well, once the rain stops, I mean the plywood boards are gonna be livable. You're just gonna be cowboy camping. like I'm just gonna like string a Cat 5 cable like just like from like a window in the house down to the yurt, and that's all you're gonna have, and then like an extension cord in there.
If the Fed is forced to cut rates, oh sorry, I don't want to. I don't want to live on plyboards in your backyard. I just got my taxes lowered on my Long Island estate, so maybe I'll actually live there now. I'm
Wait,
getting
does that mean your neighbor's home value just went down?
I think so. Well, I mean, it's just the tax assessment, right? It has nothing to do with the real estate market.
Gotcha.
Because I think the prior assessed value for the house was like 680, and I got it down to like 540. But like the like market value is like 2.6 or something like that.
God damn.
Yeah. So it's
Dude, why don't you just
they're
sell
not
that
they're
thing?
not related at all, right?
Like you can't even I get that you bought the house for free, but like the cap rate on even like a free house over there is probably just like nothing compared to what you can get in the market.
Yeah. Well, I mean, as soon as I'm past the like the cap gains tax, I'm probably gonna ditch it. Like I don't really want to. I don't really want to own it. I mean, like a
I'm
lot
sure
of
there's
people have like tried to talk me into converting it into like a Verbo, but it's like 100. I'd probably spend like 150, 200 grand just getting it like all remodeled and shit, and getting the pool working and all of that, and then I'm gonna make like what, 3 grand, 4 grand a month off of it, and then maybe a little bit more during like the summer. It just
Why would
doesn't
you
seem
turbo
worth
it, dude?
it.
I would just rent it out at that point.
Who the fuck is? No one's gonna rent it. It's got like 8 bedrooms. I feel like people who have the money to rent it would just buy a house.
That's true.
It's just yeah. It's like ridiculously. It's too much. Like I
Well,
think
like
I'm
okay,
better
so
off
like
just selling it.
is it near any sort of like convention centers or anything?
No, no, it's in the middle of fucking
Oh,
nowhere. Like out in like rich people territory, the like far end of Long Island.
oh yeah, then I would ditch that thing.
Yeah.
I mean, but the thing is you're gonna have to give it a pretty steep discount if you don't fix things up. So
Yeah,
maybe
yeah,
you can get
that's what I
turn on
figure.
that.
I talked to a couple of real estate agents, and they all kind of said around the same asking price, like between 2.5 and 2.6, and then like if I fix everything like 2.8, which would double the investment, but it would extend the time right to sell it. It would take me another like permitting and everything, probably like another like 6 to 12 months. And I just don't want to hold it that long because I'm worried it won't hold its value that long.
Well, like okay, so like, but like, how long do you have till your cap gains go to long term?
Uh, July, I think. It's
Oh
either
fuck yeah,
it's either end of July or beginning of August this year.
yeah. Well then, yeah, I would just honestly, I would just put it at market value, and then tell whoever you're listing it with that you're willing to credit off the pool for however much.
Yeah, that's what I figured I would do. It was just like give them 50 grand
Yeah, see, there you
back,
go.
and like they can fucking deal with the shrimp farm themselves. It's
Yeah,
it's
for
it's
sure.
way too big for me, right? Like if I were gonna live there, it's ridiculous, right? Like, the fuck am I gonna spend like 3,000 a month heating it, and like 1,000 a month on the electric bill, and just live there by myself? Like,
Yeah, just have like a bunch of empty rooms.
plus paying like 15,000 a year in taxes.
Yeah, that's ridiculous. Although, I could rent out that house from you for $600 a month, let's just say. And that includes food, gas, all the amenities. Sound good?
Absolutely not. Don't do that, Girk. Just sell it. Yeah, I think I'm just gonna sell it. I want to sell it, and then I want to sublet my apartment and then move into a slightly nicer or slightly bigger apartment, and then like subsidize my rent with the subletting of my current unit, or get the management here to buy me out of my lease.
Yeah, that makes sense. Yeah, if you could So if you sublet it, what's your yield on the sublet? You think you can get like 30%?
I could probably make like 40%. I mean, so my rent right now is 3,400 a month, and
Jesus
on
Christ.
the lease renewal, it goes up like 2.5%. Have you thrown a party in that house for you, Dork, JFresh, and Zom enthusiasts? You know, you should before you sell it. I don't know. The pool's a swamp, and the inside of it is dusty and smells like Chanel number 5. I don't think it'd be a very enjoyable party.
So Girk, what if I told you you could spend less than half the amount of rent you're spending now on the same place somewhere else?
Yeah. See, it's the somewhere else part that I don't like. So I can rent my apartment right now for probably like 65 or 7. So almost 50% over my like current like monthly cost. And then I also don't have to pay the utilities, right? Um and then
That's fucking insane.
I could take that $3,500 and I could get like a $9,000 apartment, and it would only be like 6 grand a month.
You basically just said you're gonna rent out this apartment for more than I make in a year. It's fucking
Wait, no,
insane, dude.
that can't be true.
It is. If you're doing it for if you're doing it for 7,
Yeah, it's
you're
84.
easily yeah, you're easily renting it out for more than I make in a year.
Yeah, but you got a raise, so you're not factoring your raise into this.
Well, and the fact that my raise is gonna go up more because time progresses.
Also of that $84,000, half would still be going towards my actual lease on the unit, right?
Yeah,
See,
that's
what I
true. And then
want them to do is I want them to buy me out of the lease, like 10 years at market rate. So I want them to give me $800,000 to leave. I don't think it's unreasonable because I
dude,
mean
the
they're just
fucking
losing money every month I'm there, and I'm never gonna leave.
dude, the rent market in New York is so unbelievably fucked up. If that's an actual conversation you're having where they're gonna pay, not only am I getting, just this quote unquote ridiculously low rent, they're gonna pay me almost $1 million to fucking leave.
Yeah.
That's so fucked up. It's like
Well,
I
yeah,
don't.
but they can rent the apartment for 50% more than its current rate and raise those rents 10% a year for the next 10 years, right?
But
Or
you're basically
they
you're
can
basically
leave me in
renting
the
it out.
apartment and they can only raise the rent 2.5% every 5 years for the next 10 years.
Yeah, so you're basically what you're gonna do is you're gonna put them in the hole by 50% on their returns for like the next 5 years.
Well, no, forever.
Well, no, when they buy you out, right, for 800
Well, yeah,
grand.
if they buy me out.
Yeah, if they buy you out, then they're not going to see the return on that investment for another 5 years, and by then rent prices could just collapse because
Yeah, but
New York.
alternatively, they can leave me in the apartment and never see a return on the investment ever again, forever.
That's true. But you're a decent tenant. I mean, I'm sure you don't fuck the place up. I mean, that
No,
alone
no, I
is
don't. Yeah, I don't
like
fuck
that.
anything up. I don't like have any wild parties or anything like that. I haven't burned
Yeah,
anything down yet.
that's like the number one reason why my landlord was like, stay there as long as you want. We're not going to raise rent on you, and if we do, it's not going to be by much. Is just because I just don't fuck the fucking place up.
They've already offered me like 325 to get out and my moving costs.
They're a third of the way there, just
Yeah,
about.
so they're almost halfway there.
Living on a prayer.
I figure as we get closer to me renewing my lease for 2 more years, then it's gonna get more exciting.
Yeah. All right. Well, it sounds like you got a decent 5-year plan.
Yeah, and none of that includes living in the middle of fucking nowhere on Long Island.
Well, you could always come live in a yurt.
It's true.
I'm only charging $3,400 a month rent for the yurt.
I could rent like 3 houses for that price there. I mean, they
Two and a
won't be
half.
yurts in your backyard, granted, but
Yeah, you have access to pork chops.
oh god. All right. Well, don't undersell it. You know,
Oh, I mean those pork
Dork's
chops.
not from Florida.
Wait. Who said I was from Florida?
Lawrence of Arabia.
All right, and put user in timeout for 1 minute. There we go. Okay.
If you could legally sublet for that much of a difference, that would be a great deal. The PM still has to deal with repairs. Yep. Yep, they do. And I do have a legal right to sublet. The management company really, honestly, they should just pay me out and then sue the management company for the money. Because it's their fuck up. They fucked up really bad.
Yeah,
And
they're
they're like a big management company, so they have no problem paying it, right? But that's what I would do is I would pay me and then just file like a case against the management company.
uh, man. It seems like more people are in the stream right now. Are there people who are just waiting for it to just be me and not JFresh?
I don't know. Maybe. Yeah, we actually have quite a lot of people here today,
Hmm.
despite JFresh not showing up. I'm hoping he shows up, but I think he might be asleep and drunk in the Admirals Club at O'Hare.
Oh, is he? So today's his travel day.
I think so, yeah.
Oh, that sucks. Yeah, fucking. I hate traveling, dude. Airports for like.
I don't even
It
know if
was.
he's in O'Hare. I'm just assuming because that's where people always end up when they're
Well,
traveling.
yeah, from Texas, that makes sense.
Yeah.
But I used to travel a lot for work back in like 2016, 2017, like to like the Seattle area and Oregon. And like for the first like couple months I was doing, because I was like traveling those places like once a month. For the first couple months, it was pretty fun, like traveling solo and, getting all this stuff and, whatever, getting drink tickets for flying so much. But then, by the end of the first 2, 3 months, I was it just became like riding the fucking bus. Like you just go on a plane, you sit there, but like the airport itself they make it so stressful, and a lot of people who are flying every day don't fly all the time, so they suck at it.
Yeah.
They wear like lace up boots to the fucking security line. They have like these gigantic fucking bags they try to take on the plane.
I mean
All the stuff.
my old job was kind of like that. It was like I was on a flight like almost every day. And it wears on you after a while. Like, yeah, you're right. At first it's super exciting. You're going all over the place. You're seeing new things and new places, and you're staying in fancy hotel rooms, and you're like, this is fucking dope. um and then yeah, after like 5 6 months of that just every day, it gets old really quick.
Yeah, plane seats fucking suck. They hurt. They hurt real bad if you get on them a lot. Like you're spending like hours at a time just sitting in this really shitty chair.
Oh, see, I didn't I didn't have that problem, but I understand the pain.
Oh, fuck you, goddamn first class motherfucker.
It was mostly business. Sometimes I got a free upgrade.
Cunt. I was economy all the way, bro.
This is why you need to work in private equity, Dork.
That's true. It's really true. I need to get paid too much to fly on way too fancy of planes and eat way too fancy of food.
The occasional private jet too.
Oh, good lord.
Yeah,
If it comes with like a queen size bed in it, oh, I'm down.
that would have been
Like a
cool. No, most of them don't. But there was this one guy's jet I flew on that had a bed in the back, and yeah, he was a pervert. But he had a lot of money.
funny how that
Imagine
happens.
not flying first or private. You might as well walk.
Uh, you guys, God, uh, I need to make more money.
I feel like that when I was consulting, I was getting borderline depressed from the traveling. Yeah, yeah. It's well, I mean, like you have like nowhere that's like home, right? When you're traveling that much, you're constantly on the move, and it's like I don't know if it's depressing, but it's very it like it's annoying, and it like builds up over time.
Yeah,
Like
yeah.
you can never decompress.
No, yeah, exactly. You're constantly like you just have like you get in this mindset where you're just always having an itinerary, and so when you get home, you're like still in that mode, you know?
Yeah.
It's just ridiculous.
Nvidia, whose chips power artificial intelligence, has been sued by three authors who said it used their copyrighted books without permission to train its NEMO AI platform. Bullish.
Unironically bullish.
Yeah. No, that sounds pretty bullish.
Yeah, no. Legal problems? I mean, look at what happened with Boeing when their planes started falling apart. Legal issues are always bullish for companies because you know what that means? That means the engineers took the time and careful consideration to be able
Steal those
to
people's
conclude,
work.
yeah, to conclude that that the legal ramifications were worth the engineering shortcuts. They put a price on that copyrighted material and legal fees and compared it to their revenues and went, yes. So bullish. So bullish. It's the most bullish. Disenfranchising people, so bullish. It's the most bullish thing you could ever tell me. This is America. This is the US stock market. Are you kidding me?
Yeah, exactly. I mean, what is IP really, right? Copyrights? Pff, those are a thing of the past now.
Yeah, no,
Have you heard like the AI bull pundits are like, oh, the copyright issues don't matter. Like copyrights, we're just moving on. That's an archaic system.
yeah, right, yeah, no, yeah, exactly. They're going to a post-copyright world. That's really what it is, more so than a post-capitalist world.
But we haven't legislated a post copyright world, right? So that's the problem with that idea, is that the legislation is, 20 going to be at least 20 years behind that. And all of these LLMs are going to get the fucking shit suit out of them, even if they're using synthetic data, right? Which is that's the big thing, right? Is that like you create data that's not the original data, and then you train off of that data. Except most of the time, the synthetic data is also just the original data.
Oh yeah, well, I mean, the 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 way I think about it is like AI, right? So the difference between AI and humans is that AI interpolates, right? It draws lines between points,
Yeah.
whereas humans extrapolate, right? So you with these AI applications we have, you make a big box and you put this program in the box and you say draw lines in this box, you know, and
Random lines, mind you.
yeah, exactly. Yeah, and that's what you do. And and this is kind of what Jay Fresh was saying, where like we're just raw dogging, making the box bigger with bigger chips and more data,
Yeah.
but that doesn't eliminate the fact that you're still inside the box.
Well, I mean, I think Sam Altman's idea, and don't get me wrong, he's not an engineer or any kind of professional anything.
He's a
Um,
mole.
but his idea is that if you keep making the box bigger and it's able to draw more and more lines, eventually you're going to get this like magical spark that creates original thought, right? Except, that's probably never going to happen. There's probably like JFresh has weighed in on this a bunch. There's not enough, like, we don't have enough energy. We've never created enough energy, and we probably will never create enough energy in the at least in the next like couple hundred years to realize that goal, right? Of just trying to like brute force our way into actual intelligence.
We don't even have. Well, the thing is, it's not even a question of algorithms. It's a question of, or it's not a question of energy. It's a question of algorithms. Like we're making interpolation machines, and those will never, ever, ever be able to have an original thought. It'll
Yeah.
always be, it'll always be inside the box.
Yep. And then the
And
boxes, and then like the idea of like LLMs training smaller models is just you're just making the boxes smaller and more specific and reducing the ability to create original thought even more with like as like convergent evolution in the LLM continues, right?
yeah, so long story short, AI is still bullshit. I haven't seen anything come out of AI that's super cool. Like one of the new ones, I think it's called Claude, ended up having like an IQ of like 100 or something, or 105 or something like that. And I was like, okay, still bullshit.
Dyson
Like, if you-
sphere, let's fucking go. That'd be cool. See, that'd be worth the $7 trillion.
I mean, to make a Dyson sphere, we'd have to like take Mercury and turn it into a Dyson sphere.
We just need one big cable and all the solar panels, Dork. We got this.
I well, yes, but I'm talking about the materials themselves. It would be like enough materials to make a planet to
Yeah,
make a
yeah.
Dyson sphere.
It would probably need to be a lot bigger than Mercury, right?
But yeah, Mercury might do it. I mean, if your surface area is low enough, you could probably get away with Mercury for at least like a Dyson ring, you know,
Okay. Yeah, I can see it as a ring, maybe a ring.
a Dyson
Do we know?
annulus.
Do we know how ductile the planet Mercury is?
Well, I mean, based on its composition too. I mean, if it's pure silicon, then we can do some stuff with it, but it's probably not pure silicon. I think it's mostly metals. So we could build the frame with Mercury and then get the silicon from maybe Venus. I think Venus has a lot of silicates on it.
Tesla leverages AI the most to run functions in their factories. Are you talking about their remote controlled bots? They clearly have like game controllers attached to them. And they're like, look at this
They're like,
bot doing work. It's not plugged in. Don't worry.
right, yeah, where they're like basically using like script functions to tell it to do stuff. And they've like perfected those functions over the course of like several months for this one video. And then when it happens, like you even see in the background, everyone's like clapping and cheering.
Mirrors in space reflect sun to panels on Earth. Yeah, that's a great way to just shoot a giant like sun laser across the surface of the Earth. Millions of people
I'm pretty
die.
sure that's how the Jewish space lasers do it.
Oh, Jesus. Yeah, I mean, you're like one solar flare away from wiping out a continent. That's a terrible idea.
Ah. When has that ever stopped us as a race?
Your giant space laser loses its geosynchronous orbit and just toasts a line across the Earth's surface at
It
18,000
slices the
miles an
entire
hour.
atmosphere like a scalpel.
Jesus Christ, that'd be so bad.
Ah, yeah.
Yeah, we're not gonna do that. Also, the Earth's hot enough without magnifying the sunlight coming into it.
Yeah, no, it'd be better if we used the moon like that, and then we just ran a giant extension cord from the moon to the Earth.
Yeah, because we totally have the materials capable of doing that.
Right, and
Anyway,
the moon doesn't orbit the Earth or anything. It's totally locked where it is. So yeah,
so this week, Japanese GDP tonight, kind of a big deal.
yeah.
Um,
Can we talk about how the USD JPY has dropped like what 2%?
I think we're beyond that. We're are you talking about like the pair, like the
Yeah, yeah. The currency pair has dropped like 2%.
yeah, it has. There's like a decent amount of fear surrounding the idea that like BOJ is going to make a decision this month because their inflation's getting kind of out of control.
Yeah, their oh God, their economy is in a really, really, really tricky spot, isn't it?
Yeah. What's been
Because they're not
really
growing.
crazy to me is that the carry trade's been leveraging down, but the market's not going up like crazy.
Well, yeah. I
Like we're
mean,
down almost 60% over the last 3 weeks. And the market's like barely up. I mean, the last time we saw this much deleveraging on the carry trade was like November, and the market went up like 15%. And
yeah,
I think we've gained, was it like Feb 14? So since they started deleveraging, we've gained 4%.
interesting.
Yeah, ratio's not quite so good there. Also,
I mean, I wonder if the thing
the
is like
the
you gotta
forward
wonder how
yield
much
on
of that.
volatility is really starting to pressure positive.
Yeah, that's what I was thinking is that you gotta wonder how much of that is going into equities versus bonds right now. I mean, we've seen spreads continue to sort of decline.
It's definitely going into bonds. There's no fucking
Yeah,
question that it's going into bonds. I mean,
yeah,
someone's prepping for like a credit event, right? It's definitely not all the participants, but it's like at least enough to move markets are. There's definitely like a flight out of dollar longs. There's a flight into yen longs. There's a lot of buying in treasuries. So someone thinks credit spreads are either going to collapse. I guess they would benefit most if they collapse, but if they expand, those people are also fucked.
yeah. I mean,
And that's really
like,
going to boil down to FOMC the week after next.
right. So the BOJ decision on YCC, if they make one this month, does that force the Fed's hand to raise rates again?
Probably, yeah. Otherwise, we're going to have some really extreme market volatility, right?
That's very
Actually,
interesting.
yeah. And I think, yeah. So I think if CPI and PPI are up, and I don't think the Fed moves first though. I think BOJ does. Maybe.
I
Hmm.
mean, they've both been playing this game of monetary chicken for a while now,
Yeah,
and I mean,
BOJ's interest rate decision's on the 18th, and the Fed rate decision doesn't come until uh, the 20th. So they're 2 days ahead. But if
I
CPI,
wonder.
PPI are hot and the Japan bumps rates to positive, I think JPOW would have. I mean, in order to prevent broad market volatility, they would have to raise rates.
I wonder if CPI and PPI are going to conveniently come in hot.
Can we raise rates enough to offset that leverage loss? I don't think we can. We'd have to raise
Not
rates
without
like,
blowing up everybody.
yeah, we'd have to raise rates so much that we just create a separate volatility event, right? I mean,
Well, yeah.
you're talking like even a move from point one to like negative point one to positive point one, right? Is 200%. Um,
Yeah. You'd have to
and
raise rates on.
yeah, we'd have to raise rates like we'd have to bump like the federal funds rate to like 7% or something ridiculous to offset that. So I
Yeah.
don't think that's an option. I could see Japan doing nothing like they promised, and then maybe the Fed raises rates, and then maybe in April Japan, because I mean Jesus, with BTFP ending for the GSIBs and the foreign GSIBs, don't forget that we're backing Japanese banks on that shit too, right?
Yeah.
Because we're providing credit facilities to what was it, Nomura and someone else.
Yeah.
Um, so yeah, I don't think Bank of Japan does anything this month. They said they weren't going to, right? They said,
They
you
said they
know,
might.
well, no, they said so after the earthquake back in December, they said that they were going to pause all rate decisions until April.
But I saw some Twitter posts saying that they may do it as early as this meeting.
So Tanaka came out and said that he wants to move forward with it sooner rather than later, but he's always been like pushing for a faster timeline. I don't think Ueda's come out and said anything along those lines though.
See, okay.
But the problem is Japanese, like, their inflation's starting to pick up again. So I mean,
I
they're
mean,
better off doing
well,
a rate raise when inflation's high, right? Rather than waiting till they're in like a deflationary scenario again.
well, the interesting, like, so Japan is a pretty cool sort of case study, right? I mean, their inflation at this point is pretty much monetary, right?
Yeah,
The yen has been pinned at, 150 for what, like, a long time. I mean, end of 2023, it was there for a while, but now it's just been dimed at between 150, 151 for, about a month, right?
I feel like it's been like several months that we've been right around that level.
Yeah, I mean, we haven't like the yen has not dropped below 140, like 140, yeah, since when? June of 2023. So, yeah, like so this is kind of a decent case study in, the monetary effects on inflation, when you control your yield curve and make rates artificially low, especially compared to global, overnight facilities,
Yeah,
that arb naturally destroys your currency. It's a naturally dilutive process. So,
yeah.
what's happening is their currency is just slowly getting eroded and their import prices are just going up and up.
I
So
mean,
like that's
I think the
that's
bigger issue is that their reserves are getting eroded, right? Because they keep trying to stabilize their currency against a further fall.
well, yeah, that's the one thing that's stopping it from being truly dilutive. And but the problem is that it's like trying to stop a freight ship, with a little tugboat when it's going, 10 knots.
Yeah.
Not very easy, and you're not going to do much. Uh, but it's just I just find it interesting. Um, and I think that the prudent move would be to go forward with ending the curve control policy, but they're so entrenched in this mechanical system now
It's
that
not that they're entrenched. I mean, they benefit. They benefit across the board from ending yield curve control, right?
right,
But
but
they
that they don't
create a
look
ton
credit
of
market collapse.
systemic risk in doing it.
Yeah, that's the thing is they benefit in that they stabilize their currency, but the tail risk is that they destabilize the global credit market, and that's also bad for them. It goes full circle and hurts them.
Yeah, yeah. I mean, the question is will it hurt them in the long run? And I mean, I think the bigger issue is that it's so politicized, right? Like they do so much damage to other global economies at this point because leverage is so high that they're gonna lose trade partners. It's gonna be a very embarrassing situation for them economically to be the root cause of all of that market disruption.
Well, they already are the root cause of the market. Like to say that they're not at this point, like is ignoring the giant elephant in the room. They've been, by implementing this yield curve control policy for so long and not allowing things to equalize and get in line with the rest of the, global financial, stuff.
I mean, they've bankrolled our ZERP basically.
Yeah. And that, by leaving that arb open, that carry trade open for so long, you end up just becoming the facilitator of this behavior. And so, even, you know, it doesn't matter whether or not it creates like a global financial crisis or even just like a global deleveraging. They're always going to catch the blame, and I think they know that.
Yeah, yeah. Eventually, I mean, and eventually they have to make a move, right? Otherwise, their economy will fail because they will run out of reserves. They won't be able to. They won't be able to stabilize the FX markets any longer, and then, yen will just drop and drop and drop and drop until it crashes, right? So
Right.
yeah, or their inflation explodes to obscene levels.
Well, both, right? It's basically going to be yen's gonna tank, import prices are going to go through the roof, and then
Yeah, and they're an
they're
island,
just
so
going to
it's
literally
not.
squeeze the consumer to zero.
Yep.
So yeah, no, it's a net bad position. You know, it's hard to because Japan's economy is so weird. It's hard to like nail down how it could have been handled better
I mean, you have to
because
assume that through the IMF, something is going to be attempted to reduce the volatility of that, right? Like, and I think that's what the central banks are all planning on, is that they're going to all cut rates ahead of Japan raising rates, right? Like ECB, Great Britain, the US, right? We all but the problem is at this point in time inflation should be coming down and it's not. And so now the central banks are faced with the decision like, well, we still need to cut rates because of Japan, right? But we can't because inflation's increasing. So, cutting rates right now would mean probably inflation at like 5-6% again.
right, or just entrenched at like 3-4% for a
Yeah,
long,
for a very
right?
long time, right? Yeah, that would have to be like the new low target, right? And that comes with a substantial, like, I don't see a way out of this without creating a ton of risk.
I think that maybe the goal is that the deleveraging from Japan ending YCC combined with the rate cuts will sort of damp, the impact of the deleveraging, but the deleveraging itself will have a downward effect on inflation. It's a risk, right? It's a huge risk, but I think it's the best risk to take in the whole grand scheme of things because you're both taking steps to collapse that spread at the same time, right? It's like a dance.
Japan
And
doesn't
so
have to lower rates and Japan doesn't have to raise theirs. That's true. And that was something that I outlined at the beginning of the year, is the kind of do nothing policy and wait until banks are in a more stable position, right? The problem with that, though, is unless we're actively pressuring those banks to increase their reserves and reduce their overall leverage, like Basel 4 statutes would require them to do. So unless but we're backing off of that, and that was something Elizabeth Warren brought up at the Senate meeting, was that back when the banks were failing, we're like, okay, we're committing to this Basel shit. We're going to increase the depository requirements of all of these, not only regional banks, but the GSIBs as well. And we're going to ensure that, they're not over leveraged and they're not going to be in a position to destabilize markets or create contagion. And ever since then, we've done nothing but back off of that point, right? And if we're not pressuring banks to reduce leverage, then they're going to keep leaning more and more into the carry trade, because greed will always be ahead of risk safety there. And there, if the central banks aren't forcing higher depository requirements, or there's no real threat of a shift in rate policy, right, or creating a credit event like that, banks are simply just going to call the bluff, right?
yeah,
They'll call the
I
bluff as
mean,
long as they can because they have the power to do that. Um, and it means a lot more money for them. It means a lot more stability for them because they need that net interest income in order to pad those losses. And the losses are substantial, right? We're talking about tens of trillions of dollars in potential losses that are currently unrealized, but could be at any moment.
yeah, all it takes is a margin call,
And it could take a decade of leveraging the carry trade and increasing net interest income at substantially higher rates in order to offset those losses. And that's where we're at right now, right? We're right in the position where rates are high. Banks can continue to lend using leverage from Japan, right? and these currencies that are, you know, substantially cheaper than the dollar, but mostly Japan, because a lot of other economies aren't set up well to handle that kind of money velocity. But you know, and then you know, they can continue to lend, they can continue to push capital out into the markets, but you also create the risk of overheating on the other side, right? So if you constantly have banks nonstop pumping money into the economy, you're going to increase inflation, right? I mean, just the velocity alone of all of those transactions is going to be inflationary without getting into, you know, the like treasury spending or deficit spending.
Yeah, and like for example, my mortgage rate was 5.85%. Okay. So
Which
if you're
theoretically should not be possible,
yeah, I was
right?
just gonna
That
say
would mean that the bank is taking a point five interest rate risk on top of the FFR, right?
yeah, exactly. That's what I was gonna say is if they borrowed at the FFR to give me this loan, their spread is dog shit, and over the 30-year time period, they're barely gonna yield above inflation, right?
I don't
The
even think
only
they
way
would yield above inflation.
yeah, the only way it makes sense is if they, borrowed against yen at a lower rate, and used forex to switch to dollars to give me that money.
Yeah.
That's the only way with that arbitrage spread that they would be able to beat inflation with a yield on my loan.
Yeah, because then they're getting a 5.85% spread, or, well, 5.95% spread against the yen, right? Because the negative 10 or negative point 0.1 versus 5.33.
But it only works if the thing is that trade only works if the yen goes down in value,
Yeah.
right?
Yeah.
So the fact that yen, ever since I bought my house, has gone up uh, against the dollar about 2-3% tells me that they just took the losing end of this leverage trade that I went into with whoever ended up lending me the money. So, yeah, but that's the game they're playing,
Yeah.
right? And it's not just with mortgages and credit cards and auto loans. It's with, commercial loans, especially. Those are where that's where the bread and butter of these banks is. It's a little bit in mortgages, a good amount in credit cards, but those beat inflation with the yield spread anyways. Like the mortgages and auto loans do. Auto loans not so much,
I
but
mean, there's a reason Buffett went long like every Japanese margin lender in existence, right? It's
yeah,
because when they call that margin, their fucking books are gonna swell like crazy.
yeah, yeah. No, it's it's a very delicate game. And the thing is, though, is when you also talk about these markets, it's not like shorting a stock or, buying calls or just buying stock. It's not like you could just back out of your agreement and, exit the trade when you want to necessarily. I mean, you kind of can, but with how much fuckery and weirdness is going on with these, these trades. So, you don't just open a carry trade and then you're done, right? That's not how it works. You don't just go and borrow yen, buy dollars, and go and fucking loan them out. There's a lot more to it. There's a lot of currency pair hedging that's happening, a lot of performance swaps like dollar yen swaps that you got open, and you're constantly maintaining. So trying to like back out of say like $500 billion worth of carry trade leverage into collateralized loan obligations in the US and trying to dump all that and get yourself back to neutral is a fucking nightmare. Like so it's not just as easy as, oh, I'm just gonna sell my carry trade. Bye bye. No, it's nothing like that. There's gonna be this round robin effect that happens on all this dollar yen collateral. That's going to be very interesting to watch play out because you'll see a lot of volatility in the forex markets and in treasury yields, but mostly forex. That'll slowly bleed over to volatility in the bond market until it very quickly hits the bond market right at the same time from a big player exiting. And that's when you get the huge risk for margin calls of other players who are caught with their pants down from the first person getting out. Very, very cool stuff. I'm
Yeah,
excited
well,
to see
and here's the thing is I think we're getting, we've talked about this for a fucking year. We've talked it to death. Everyone in here's heard it a million times and they're like, "Okay, yeah, but I need to buy calls on Monday, right?" But I think we're getting really close to a pinch point here. And I kind of tried to explain this week. The Fed, despite Biden's statement over the weekend, which might cause some bullish buying on Monday, the Fed is working very hard to walk back their policy change, or the direction of their narrative from November, right? Like Bostic came out this week and said, I expect 2/4 percentage point cuts this year, right? Which is one less than, the prior dot plot. We've got JPOW making basically just no comment about rate cuts this year, right?
yeah,
He,
Cash Carter said, like, if the economy is exploding like this, why the fuck would we even cut rates?
yeah, and Kashkari is one of the biggest doves, but I mean, he's not a voting member right now, I don't think, but I mean, Kashkari actually exactly said what me and you have said a few times over the last month or so is like, if the economy is so great, why would we cut rates? There's no reason to cut rates in a good economy. Like if your economy is strong, you keep rates high, right? And you have
Well, especially if the economy is withstanding the real rates being as high as they are. I mean, like that's the thing is like real rates clearly have not had a drag on the economy. That's the big thing. Like it's ridiculous that it hasn't. It's purely from deficit spending, but like that's the big kicker is like if real rates are going to be a drag on the economy and they haven't started being a drag yet after a fucking year, I mean, it's just it makes no sense. It not only has it not been a drag, it's like not even close. The economy has just said, "Hold my fucking beer."
yeah,
Like,
yeah, basically.
why the fuck would you cut?
But I think a lot of people maybe aren't recognizing the fact that it's like, well, someone is obviously getting out right now, right? We've let's shift this more towards like indexes, right? And away from the macro. And
Okay.
we're seeing a lot of deleveraging in short vol. We're seeing deleveraging on like SPX put leverage has dropped substantially. JFresh gives you guys that chart every week, and I know most people don't know how to read it because he only explained his methodology once, and nobody wants to go back and look at that. But basically, we're seeing a lot of not only volatility in the amount of leverage inputs, but we're seeing the overall net effect is declining leverage, right? And this is about a week old. I think leverage has probably declined even more this week. Um, but this is almost at a 1-to-1 ratio with the deleveraging we're seeing in the yen, right? And so a lot of that margin that's being sucked out of Japan, and that amplification of those assets is being put directly into the SPX where yields can be gained, right? You can sell these short puts, and you can make even more yield on your arbitrage spread, right? So you're getting your sweet fucking 5% arb over in Japan, and then you're leveraging that shit up like 10-to-1, and then you're netting like a 3% yield on that leverage ratio here in the US selling puts, right? And now you're getting you know effectively 30% on your initial yield plus your 5% arb, right? And then this is obviously like almost risk free, and this is just like the best trade ever, right? And everyone's fucking in it, except someone's leaving it right now, and I think this is really really telling and something that we should be very focused on because that leverage ratio is falling, the yen leverage is falling, someone's getting the fuck out, and there'll be a first person to the door, and then everyone else will try to make it to the door before that person gets out of it, but it could be too late for the rest of them, right? And this is generally how these things start to break down, is one or two big enough players start moving the market the way it shouldn't be going, and it opens up the risk for everyone else. And so it's something we are definitively seeing in our SPX options positioning. We're seeing it in the yen dollar swap, right? And we're seeing it in forex markets and bond markets as well. And remember, like, so I pointed this out in Dillionaires earlier this week. I don't know if everyone read it, but basically, if you have $1 million in bonds, right? And we know these banks have substantially more. They're sitting on trillions of dollars of uh like fair value asset risk, right? And depending on um kind of the yield curve, it depends on how much risk they're carrying at any given moment. But these shit securities. This is what they're leveraging up in Japan, and this is the reason I think the BTFP maybe doesn't matter that much. I think Japan's, like, the spread in Japan is far more important than BTFP giving them par value. I don't think they've ever leaned on that facility as much as they should have. And I would say, like, I think that facility peaked at like 300 billion, right? Which is nothing compared to the trillions in leverage being transacted in Japan, right? But say you have a million in bonds, right? And you're leveraging that at a ratio of 1 to 10. So you got 10 million in leverage, and then you're using that to sell puts on SPX, right? Just for an example, you could be using it to create mortgages, you could be using it to sell puts, or whatever you want, right? You're just bringing the cash back at a leverage ratio. But if the value
Just
of
say they're
your equity,
0.35 delta puts too.
what's up?
Like, let's just say they're 0.35 delta puts too, just to be nice and safe.
Yeah. I mean, but, like, here's the problem though. If your equity value, your bond value, reduces by 10%, that means that one that means so your equity is reduced by $1 for every $10 that you've leveraged, right? So if yields move up and the value of your bond drops, now you're out $100,000, right? Or that's just 1%. So you're at a million on a 10% move.
Yeah, on your leverage. Yeah.
Yeah, and that's the entire value of your initial equity on a 10% move. Your initial equity is wiped out, and then if it's a 12% move, you're now called for 200,000. If it's a 20% move, you're called for another million, double your initial equity. If it's a 50% move, you're being called for 4 million, which is quadruple your initial equity, right? And this is just a, like, and you can scale this out. This is 10 trillion or 150 billion, right? If it's 150 billion or 100 billion even, you're out half a trillion on a 50% loss in equity. So I want to really drive home that the importance of that leverage ratio, and what it means when the risk starts to break apart in these scenarios.
Yeah, and usually, like, and this is where, like, the movie Margin Call was pretty dumb,
It was
right?
so
Basically,
bad.
if someone said our risk is too high, and the other guy was like, sell our stuff, and they were like, okay, we sold it. The end.
Yeah. Well,
But
I
the
mean,
reality, that's how it
Demi
starts.
Moore was somewhere in there.
I think so, yeah. But
Mm.
but that's the reality of how it kind of starts. Is the risk analysts of one of these banks realizes that they're over levered, right? To the point where, if their equity position does lose, like, they basically just do what Gert just did, but they say, yeah, if our equity loses this much value, we're going to get called for more than our net assets. And that's like what a margin call is for a bank, more so than like them like getting straight up margin called. First, they have a call about their margin to try to quantify these things and make sure they can handle certain loss levels that they have in their like, probability analyses. And if a bank realizes that they're over levered for the amount of risk that is present in their positions, they're going to start deleveraging. And once that happens, that's when the pricing starts exiting those risk models of all the other participants, and they get margin called. And that's what happened in 2008.
Yeah,
So
it happened in 2008. It happened in 2000. You know, slower in 2000 than '08, but yeah, I mean, you start, so the value of those equity assets begins to decline, right? Housing prices drop, MBSs drop, right? People start selling MBSs drop, people start selling CMBSs, the value of CMBSs declines, and that means that the leverage on those assets, those assets are being leveraged everywhere. Leverage of those assets is dropping at a 10x 5x rate to the losses in the equity, right? Boomers have to
yeah,
unretire, maybe, but like
I mean,
this is not an encouraging sign, and I know it's not for a long period of time, right? But seeing yields drop and vol convexity returns increase, um this is like this is a substantial movement, right? And this is in line with the drop in yen leverage and the drop in SPX leverage.
yeah, this all points to the risk profile of the global financial system shifting.
Significantly. Yeah, this is volatility convexity yields turning positive is probably the most accurate uh indicator of a future recession or depression.
Right, or at least like it's a very accurate predictor of upward pressure and the unpinning of volatility, which likely leads to rapid deleveraging.
So we did
Right.
we did see something similar back in October, right? But yields were increasing, right? So
Yeah.
the value of equity holdings was declining as vol increased. This is different. This is, the value of equity holdings is increasing as vol's increasing.
Yeah. And this is almost it's a consolidation.
Yeah, and if we go back, we could probably see this same effect prior to like the COVID crash. This is a good example. Emergency lending facilities were cut off before COVID crashed too, and also in '08, which does highlight the BTFP as having maybe slightly more importance, but as you and this is very volatile, obviously, but up until that volatility, you see the yields are increasing, vol is increasing, right? The market didn't crash here where yields are decreasing, vol is increasing. Here, you didn't see that with yields decreasing and vol moving up, right? And the market didn't crash here. The market crashed here when both of them, both the bond value and the vol value were moving higher. And if we go back to '08, I think that situation is pretty similar. Here,
Yeah, I could put a chart of the
you
lead into
see
2020 and like the
yields
oh,
and then vol, and then I think the actual crash was like right around here. So I think this was when Bear Stearns went under, right? And then
it
this
looks like
was
you're in
this was
2020.
no, this is 2008. This is '08 right here. This is '09.
Oh, I must be super behind on the stream. I probably am.
Oh, maybe, yeah.
Yeah, I definitely am. Okay.
Yeah, we see like vol overtake the forward return on yields, right?
So I
And
like
that's
I
when we had
like
that. This was the crash. This is crash.
right. Yeah. The rate cuts and the crash, yeah. I like 2020 and like the lead up into 2020 a lot more, because
It
it
more
more reflects
accurately reflects our current situation.
exactly, yeah.
Yeah.
So like in 2019, right? Remember when like $4 billion of emergency loans went into like 5 banks, right heading into the end of the year, and then at the beginning of 2020, you see, some interesting stuff happen. Uh, you have bond convexity going positive in 2019, and then going shortly negative when the emergency loans came out, and then
Yep.
you see forward return on vol start to pick up. Right,
Yeah.
it
Big time.
stops being so muted, uh, and then that forward convexity just barely peaks above the positive line a few times, gets shorted back down. But then, it was a black swan event in that one day we just went surprise, or we're turning off the economy.
True.
So that's a little different than it is now, but it shows kind of the whole, like the cycle of risk appetite, right, between forward bond convexity and vol convexity.
Yeah.
Um, like leading into it, you see, and leading into the COVID crash, we were running into some financial stress, and J-Pow cut rates because we were stressing out the economy within months of raising rates. Uh, and
I mean, we were
what
starting to overheat a bit.
we were starting to overheat, but so he raised rates. But the problem was, as soon as he raised rates, several banks went, dude, we need some emergency liquidity. We're fucked.
Yep.
And so he gave him money, and then he cut rates. It was like, and he didn't do it by much, but he did cut them. To try to stave that off. And then COVID happened, and leading into COVID, you see risk appetite pick up at the beginning of 2020, or not risk appetite, but safety appetite pick up. And then all hell broke loose, and then we cut rates to zero, and then we
And
just made the situation
if you
worse.
guys want like a little idea of the scope of the leverage, right? Before the crash in 2020, the carry trade had been leveraged up following the emergency liquidity facilities from the Fed, right? So Fed rates went up, carry trade got leveraged up immediately because banks will always immediately flee to the negative rate. Um, and so, you see the carry trade get leveraged up, and then the Fed cuts rates, right? And we see leverage drop from like 210% down to like 41%.
Yeah, just completely dumps all their leverage, all
Right
of it.
now, right now, leverage is at 706%.
Yeah, that's a logarithmic scale, folks.
Yep. Yeah.
Yeah, it's
So leverage is, 3.5 times higher on the carry trade than it was in the COVID crash. And almost as high, I think actually higher, well, almost as high as it was moving in. Yeah, so if we go, this is the '08 crash. So we're about 200% higher than we were going into the crash in '08.
I mean, '07 was when Bear Stearns collapsed, right?
Yeah, yeah. So you have this is when the first policy change took effect and they started de-risking the trade. See, this is very structured de-risking of the carry trade. And then Fed rates went up, leverage increased again. This is when kind of the rally going into the crash happened. And this was around beginning of 2008. And then they had to de-risk really rapidly as rates were cut. And then, all at once.
And they all got margin called and had to dump everything.
Yep.
Yep.
That's when
Disorderly
everything
exit right
that's what
there.
this is when everything failed. And right now, our leverage is so much fucking higher on this carry trade than it was in either of those prior scenarios.
I mean, in notional terms too, it's like eye-watering.
Yeah. Yeah, in notional terms, this is trillions and trillions of dollars of risk.
So many trillions, all the T's.
Think of like that DD I wrote, like the total assets of all of those banks that are at risk. This is that. This is like $12 trillion in risk.
Yeah. And it's spread apart, like, in the way it's like distributed amongst the banks too. It is the highest propensity for contagion of any, financial instrument out there, because it is so
Ubiquitous.
intricately intertwined with everything.
It's
Literally
ubiquitous. It's part of every transaction that occurs. This is the volatility in our money supply, or velocity. This is the velocity of our money supply.
yeah. It's fucking crazy, dude. You know what? I kind of like when Jay Fresh isn't here because we get to talk about all this crazy shit. This is fun.
When you say 760% or whatever it is, do you mean they have 7.6 times assets versus collateral? Or is that percentage something else? Hmm. Dork, do you want to explain the leverage on this swap? It's
Uh, I can do my best. So this is almost like it's almost like a swap valuation in a way, like it's like a yield, or what's it called, the yield to maturity value of the swap.
yeah.
So, when, and it's a pretty esoteric thing. I wouldn't necessarily consider like 706% means they're yielding 706% on this. It's more so a relative spread between the JGB and the UST.
Yeah.
So it's like a 7x yield ratio when you do this carry trade based on the forex, like the currency pair valuation as well. Um, so it's a, like I said, it's fairly esoteric, but it's not necessarily like a leverage ratio, like, because we don't have access to transactions and swaps and notional values of
Yeah, there
shit.
could
So
be
that,
there could be points in the trade that are more highly leveraged. There could be points that are less leveraged. But this
yeah,
is a very broad overview of the amounts of total leverage
yeah,
possible.
you could think of it like a T-bond future value in a way. So,
No, yeah,
you know,
actually.
yeah, so the more demand for this carry trade, the more this spread widens. Um, so
Which
yeah,
means this goes up.
yeah,
Yeah.
exactly. Kind of like a stock, essentially. Like the demand goes up, this spread goes up, right? Demand goes down, the spread goes down. So you can kind of think of it that way. But where we're getting these numbers for leverage ratios and those things, I mean, they're just kind of commonplace, sort of, what you're allowed to lever up with certain assets. And I mean, when we're talking about treasuries and JGBs and those things, you can lever those things up pretty fucking good because they're AAA. They're the highest quality shit ever.
Yeah.
Uh, so you
And
can
when
you can
you
really
even if you have a yield that might be shit in the US, like 2.3%, right? Say you got 10 years at 2.3%, which a lot of these banks do. 2.5%, right? These fucking really low and like low par value, mature, like long maturity bonds. Think when you think about that against a negative interest rate environment, those yields are gigantic, right? Those are phenomenal yields. So in the US, that's shit, right? You're not going to get any leverage with that collateral. But in Japan, you might get 10x, you might get 20x.
yeah.
Serious question: how likely is this to lead to a depression? Is this more than losing a decade? I mean, it really just depends on how governments and central banks react to the realization of the risk, right? It's going to be in their hands. There's there's probably ways they could manage this that would, we might not lose a decade, but that doesn't necessarily mean they'll manage it in the most efficient way possible, right?
So
I
many
think a
things.
lot of it depends on how much prep there is, and I do think that there's a very good amount of prep. I think everyone is aware of this this risk. I don't think it's a secret. I mean, it might not be something that they talk about a lot publicly, but I think the majority of institutional finance and the Fed are more than well aware of the risk this presents. I think in '08 maybe they weren't as aware. They were more aware after the failure of Bear Stearns. Um, when those MBSs started getting sold off to cover that margin in Japan, it became very obvious very quick the amount of risk that was there. But there was little to be done at that point, right? Like we were just headed for an inevitable credit event by then. And I think they even talk about that in like The Big Short at some point. There was like a break point there where it was just there was no turning back. Um, the leverage was
I
just
mean,
too high.
like the dollar collateral system, like is such a spider web, right? I mean, it's such a huge juggernaut that there's not really an easy way to just fix these things when they start popping up. I mean, like I bet the Fed was aware of certain things that would happen when you inject trillions of dollars into the market basically over the course of 6 months, right? They knew they were about to spike the deposits of these banks like crazy and force their hand to buy just unbelievable amounts of assets, right? And in more assets than they could possibly like find, right? Like if you have a market that's two apples and you tell a guy you got to buy 150 apples, I just gave you enough money for it and you're required to buy apples. You end up with what we got, and that's when you get these massive amounts of leverage getting piled into the system. Um, so there really was no turning back from when the economic stimulus was put in, and at that point when you do those kinds of things, uh, you have to be aware of these risks as you go into them. So I'm sure to some degree they knew that banks were going to pile into treasuries at an insane amount, and that's what they were funding. But they also knew that if inflation got too high and they had to raise rates, it was going to push the amount of leverage in the system up a whole giant amount. And that's ultimately what happened. That's I think that they knew this was going to happen. I don't think that anybody can really accurately predict how much the system is going to get levered up in these scenarios, but we can see that there's cracks forming in like the CMBS market. We knew about those for a long time, right? Like that's been a problem, and everyone knew about it since like 2020 and 2021. But that didn't stop the leverage from moving into it still, because people were just looking for anywhere to buy anything that had any kind of yield that was, anything, and so they did it, and that's kind of what brought us the economic recovery. Uh, and now we're just sitting here waiting to see how that deleveraging is going to play out, right? And we've done a lot more shady shit than we've talked about. I mean, it's going on. Things like collateral swaps, or yeah, so like collateral swaps on junk bonds. That's something that happens. You say, hey, I got this junk bond, but I want AAA to collateralize. So what you'll do is you'll go to some other bank and say, hey, can I use your treasury as collateral? I'll give you the yield of my junk bond. And they're like, sure. And so they do that. And then now you've got this junk bond being treated as a treasury, and that's being used for leverage in this system as well. So that kind of shit just is it's all going on right now. It's all part of this whole thing. And I mean, it could be going on with the Bank of Japan, well, not the Bank of Japan, the banks of Japan, the lenders of Japan, happening in the U.S. as well. And it all facilitates this ability to have easy money. But eventually, it all comes to a head because you either have entrenched inflation, or I mean, that's really it. You end up with entrenched inflation when money's this easy, and we're seeing that kind of happen where inflation's kind of just sitting where it is. Japan's inflation's picking up, and even worse, their economy's not really performing that well. So they're facing a stagflationary environment, which is the worst because then you squeeze out your consumers, which is, yeah, that's the absolute worst because that's when you lose a decade, right? So whether or not we lose a decade from this, I don't think we necessarily will. I think that the Fed's going to open up so many fucking liquidity facilities that's going to be unbelievable. Uh,
I
it
mean,
could be
how?
really
That's the
insane.
problem, right? Our deficits are so bad right now
One
that
word, bird.
yeah, but if
Money printed to bird.
so the Fed does the money printer, but then, you know, what are we going to have the 10-year at 20%? It won't matter at that point.
It's a shitty situation. I mean,
Right? We're just going to get our bonds downgraded like crazy.
so the worst outcome is that yields go up regardless of monetary policy. Okay.
I think oh yeah, that's something I wanted to mention real quick. Keep that thought. But yes, whoever's betting on this, right? Whoever's dropping their leverage right now, they're betting that a credit event occurs and the Fed cuts to zero, which sees bond prices rocket, right? And vol rocket. So they're going long bonds, long vol. They could be wrong, right? If the Fed doesn't cut, bonds are going to tank, like crash, and vol is going to rocket. And in this scenario, we can see credit spreads snap much wider as opposed to tightening.
Yeah, that's when we start. That's when the decade starts slipping through our fingers.
Yeah. And
So
I think still both of those outcomes are possible. It really depends on central bank decisions over the next like 3 months, right? If we get a rate increase, the 10-year is going to skyrocket.
oh yeah, I mean, like a 5.5% 10 year, I think is reasonable for the next 20 years. You know, so I don't think that's necessarily a terrible thing, but
I don't either.
that that's the solution. Like the ultimate, then this is the painful part is the ultimate way to sort of equalize and sort of slowly back out of ZERP is by having a pretty protracted period of shitty fucking access to money. Honestly, we just don't want to do it. No one wants to tighten their belts, but we have to.
If bonds go down and vol goes up, do we start getting moves daily and indexes again? I mean, yeah, we're already starting to see a lot more range intraday on indexes. And that's with
Yeah,
just like a
yeah.
couple points in vol moving up, right? If we move into like a substantially higher volatility environment, those are going to get bigger.
Yeah, we're doing like 20 bip drops in like a few minutes. Like that's something to take note of. Like the moves are getting a little more outsized as vol convexity goes up,
what
which
do you
tells you
mean?
that was that.
What? No, finish. I don't
I
mean to
was just saying,
interrupt
as
you.
vol convexity goes, or as forward returns on vol go up, you're seeing more appetite to hedge downside, and that's why these candles start to get bigger, and we're getting a little more sensitive. Vol's picking up more freely than it has in the past, right? The shorting of vol, it doesn't come in until it gets pretty bad, um, and that does tell you that we're seeing the unpinning effects of the forward returns going up. So
What do you mean
something to
by
take.
lose a decade? This. That's what we mean by lose a decade.
Without the launch back up though.
Well, not necessarily. I mean, it could just take 10 years to get back to that same price.
Hence
So
not
this
a
would be like
launch.
2034. Yeah.
Yeah, not the mother of all bounces, but just like a shitty climb up, which would be, I mean, ultimately
It would probably
the only
actually be
people
more like
affected are
this.
boomers.
Yeah, you're right. It does. It mostly just hurts the higher wealth brackets. But it
Yeah, well,
hurts anybody who would be inheriting that wealth, right?
yeah,
So it, like, handicaps the transfer of wealth between generations. Yeah, it, like, handicaps the transfer of wealth between generations.
yeah.
So it, like, handicaps the transfer of wealth between generations. So it, like, handicaps the transfer of wealth between generations. So it, like, handicaps the transfer of wealth between generations.
Right, but then it gets
Especially this time period, right? Because this is when all the boomers are going to die. Between now
yeah.
and like
Well,
2032, we're going to
well, if that
lose like
happens, then they're definitely
90% of the
gonna die.
boomers. Yeah,
They're definitely going to die if that happens because money equals access to healthcare.
true. Yeah. Not that that's something we couldn't change politically. It's just something we're unlikely to change.
Oh yeah, for sure. But yeah,
Although
if
if
that
it's an
happens,
issue facing like the entire population unit like at the same time like that, you could bet that there'll be a much bigger push for socialized healthcare reform.
after something like this, there'd be a huge push.
Yeah.
But I mean, it'd be great. I mean, like something like this is how you normalize the cumulative like income growth and wealth growth of the whole distribution. That's it's what's needed to make something like that happen. Rich people take a kick in the balls, right? Pension funds take a huge kick in the balls, and then young people have a chance to get in at some semblance of a ground floor, and start actually accumulating real valuable wealth, right? And accumulating value. That's right now we have no choice but to accumulate multiples,
The
which is shitty.
You know the craziest thing about this dork is like a test of 1800 on S&P is still like a forward PE of like 8. Like other markets would kill for this.
Yeah,
That's how I mean that also speaks volumes about how just blown out our valuations are.
yeah, no, and like that's the thing is there's two ways PEs contract, right? Either P goes down or E goes up, right? So and we've outgrown like P has outgrown E for a very long time, and it's so frustrating to watch.
Yeah. Yeah.
Markets are candy flipping. They're on shrooms and Molly at the same time right now.
Well, there's the other thing that we should consider here is if this that were to play out, right? And everyone's like, "Oh, it's okay, I can invest in tech," which I guarantee is going to be the strongest sentiment. This is where you can run into a situation that mimics the Great Depression, right? Say this really did happen, and this is wildly unlikely, but say we really did get a 10-year mean reversion on the S&P, and everyone piles into tech at the bottom. Now the dollar against the yen has dropped like 50%, right? Because the carry trade's blown up. Dixie's trading at like 60, right? That reduction, that's 100, like almost, well, not quite, but almost 80% reduction in forward revenues, right? Those revenues are reported in dollars. If the dollar drops 30%, those revenues are going to decline 30%, right? And so what you could have happen is people, buy into like big tech expecting that to be where the revenue growth is, right? And big tech margins keep declining, right? So the market starts to recover a little bit and then it crashes again because big tech can't keep up the revenues from back here
E
at
goes
the new
down.
at the new at the new dollar valuation, and then more people lose what little money they had left, right? And then you get another one and another one, right? And this kind of shit causes depressions. This is what the Fed and governments and central banks will have to prevent, because
Yeah, that's
everyone
the
thinks
real
they're
threat.
buying the bottom and then the market crashes again, and that's really it's really where you get that brutal realization that the like everything has changed. And if people aren't smart about that, even more wealth can be lost and a greater percentage of the total wealth because there's already less wealth in existence.
Yeah, that's the thing is P goes down, then E goes down. That's what Girk is describing. I'm trying to like boil this down to like very, very digestible little pieces. When you think of price to earnings, right? First price goes down, then earnings goes down. And it's the cycle you're going through is then price go up, but earnings stay same, and then earnings go down, and then price goes down. Math.
Yeah.
So it's not a good thing to have happen. Like the main crash thing, I think the central banks are less worried about. They're much more worried about those tail effects that Gerd was just describing there with continuous and cumulative wealth destruction. That's
Yeah,
when you'll
a big crash is probably ideal for most of the central banks. It's going to solve a lot of our inflation problems. It's going to, it's going to loosen up the wealth distribution. It's a big win, actually. I mean, historically the Fed has always tightened to the point where the market crashes, and it's not just because their tools are blunt, right? And they don't have a lot of control. It's also because the crash is the ideal scenario that and that's not a crash into a solid recovery. This is still a soft landing. I think a
it's a
lot of people
great
don't
thought.
really understand what soft landing means, right? But if we can see economic growth above, the 2.8% or 2%, I guess 1.8%, which is this would stimulate inflation. If we can see economic growth continue after the crash above 1.8%, this is a soft landing.
Yeah,
As far as the Fed is concerned, this is a soft landing. A hard landing would be what I described before. We this fails and we continue to see a decline in economic growth afterwards.
right. Or even just flat to no growth.
Yeah, that's true. Yeah.
Like if GDP growth is pinned between like 0 and 0.5% for like a year or two or three, yeah, that's a shitty hard landing.
Yeah. And this is where everyone messes up. They think a soft landing is this into more growth. And that's not. That's like the airplane changing altitude a little bit.
That's
There's
no
no
landing.
yeah, that's no landing. This is what landings look like. And this is what the Fed means when they say landing. And I know that confuses a lot of people, but that's what they mean.
Yeah, and it's not just we're using SPX as a proxy for literally the global economy.
Yeah, we are, and we shouldn't. But I'm not gonna. You, yeah, fuck that. It's
You just
it's
imagine this as
sufficient.
a GDP chart. Is what we're. But I mean, the thing is that the SPX is just a forward extrapolated version of the world economy, and pricing it at the center of the risk distribution. So like, I mean, we can use it as a proxy fairly effectively. Not the end of the world, but yeah, you can imagine all the lines are going to match up and do the same thing.
I think in either landing scenario, AI dies. That's the problem with bubbles. Um,
I think it's
is
great for AI because then you're going to actually have innovation and people trying to create value with it.
Yeah, well, yes, but it'll be bad for getting investment, right? So, but the
Yeah,
investment will go towards projects that have viable paths to productivity and profitability, right? As
yeah,
opposed to money just being thrown into anything that says AI, investors will be far more reserved with their decision to put money towards AI, which
yeah. They're
should
actually going to.
benefit the better projects involving AI. So very much like the .com bubble, right? You had everybody investing in anything that had .com or .net after the title because nobody knew what to invest in. They just knew it was going to grow, right? And then after the .com crash for about 6 years, investors didn't want to touch anything fucking internet related, right? At all. And as time went on, projects with promise started to attract investor capital, and then that led to the big surge in growth in what is now the digital age. um over the next like 20 years though, right? Um, but yeah, bubbles popping is not good for tech in its infancy. But in the long run, it's good for it because it ensures that, people don't take that kind of speculative risk again.
Yeah, that's definitely what's needed, and I think it's I kind of like that AI has gained, national and international attention before any sort of a landing has happened, because I think that the potential for it is there. I just think that we need to chill the fuck out and actually start asking companies, how are you going to make money? No one is even asking that question, and that part confuses me to no end.
I just wrote a term paper on .com. ECM bankers said the only way you get a profitable IPO is if the company doesn't make money. Lots of parallels to now. Yes, yeah, there's a lot of similarities, but that's part of what creates bubbles and market euphoria and all of that, right? Um,
Yeah, this promise that CapEx is going to turn into profits, right?
the promise that innovation is going to become profits is just, I mean, yeah,
Even worse.
it's ridiculous, right? We're trying to define new ways to value companies because the valuation of so many companies doesn't make sense. That should tell you everything you need to know about the market right now.
Yeah,
That
quite
doesn't
literally.
mean that doesn't mean market open tomorrow full port puts, right? But it does mean that you are now better equipped to navigate what is to come.
Yeah, I like companies that make money. Okay, so if you don't want to be a bag holder, here's the solution. All right, here's it's a two-step process. Okay, one, find a company that has positive free cash flow. Two,
Hold
buy
on,
stock
hold
in that
on,
company.
hold on. There's one caveat. And if you
Oh
if
God.
you've looked back at my investments, this should tell you that tale. I don't know if anybody actually digs into any of my long-term investments, but you'll find that I have been investing over the last year in companies that have good cash flows, but not a large amount of cash holdings.
Right.
And
Yeah.
that's really really important because if companies have large cash holdings, that cash can be devalued, right? Which means the total intrinsic value of the company is going to decline. But if they have good cash flows and those cash flows persist, those cash flows will grow as currency goes down.
Yeah. No, that's a great way to put it. And so, but you just don't, if you don't want to be a bag holder, find companies that make money and use that money to run their business.
Yeah.
Like, and they pull off profits, and whether or not they pay dividends or they do buybacks, that's a little less relevant. But just make sure they actually make money. Like,
And
and
make sure they make money in an industry that's not inherently at
that's not
risk,
overhyped.
right? Yeah.
Yeah, so if their PE is above, fucking 20, 25, I mean, okay, 20 I can maybe get with, but 25 to 30 above that, you're probably a bag holder. Like,
Yeah.
especially in a hyped industry. If you find a stock that does the hyped stuff, but its PE is below, let's say 60% of the average PE, you might not be a bag holder. You might still be a bag holder. It's a big risk, you know?
Energy and infrastructure are really good. Materials are really good. These are companies that have consistent cash flows, but they spend a lot of their money on R&D. They spend a lot of their money on growth, right? Their cash flows, they're incentivized to get their cash flows better because they're underwater on a lot of debt. And right now they're very cheap because debt's an issue, right? But over time, those cash flows are going to be able to pay off that debt, and
And
then
not only that,
then you have a
commodity.
lower debt, lower yields, and now your cash flows are even higher, right? And that's the advantage of a lot of, like, BTU and PBR and companies like that, that I've been investing in, right?
But they're also commodities adjacent too, which gives
Yes.
you a really excellent inherent hedge against inflation. So that's like that's why people like food companies too. because any company that's adjacent to commodities is already, you're creating a sort of hedged position by buying them. But those fundamentals still stand. You can't just buy something because they make food or they do something like that.
Also, when
Yeah,
economies recover, that requires huge amounts of investment into commodities, and then being commodities adjacent benefits you greatly.
yeah, yeah. So yeah, that's why oil and gas, energy, utilities, infrastructure, that kind of stuff is great
Yep.
because they're gonna have a job, you know, versus say AI companies like C3, they go poof. They may go away. You don't know. It's purely speculative that they're going to continue to exist for the next 10 years.
Yeah. And like,
And
yeah,
how
the
else
moats, the moats around Apple, Amazon, Google, Meta, Microsoft, they will probably persist. But what won't persist is those multiple valuations, right? So
Yes,
that those
exactly.
companies will remain monopolies. That part of the thesis isn't wrong. It's just that they're not going to be able to maintain those multiples, especially when their entire customer base has suffered, a severe economic downturn. It's going to force them to compete. It's going to force them to compete with smaller competitors, especially on pricing. So they lose that the one thing that makes them what they are, which is absolute pricing power.
Yeah, and to do some basic napkin math, when you buy at these high PEs, when you're long at a high PE, here's what you're saying. You're saying E is going to go up and P is not going to go down. That's what you're saying. So if you buy, you know, let's just say Nvidia at these multiples, you're basically betting that their earnings are going to 5, 6x over the next few years, and their price isn't going to go down because their earnings are going to realize, a more reasonable multiple. That's what you're speculating on, and look at look at Nvidia's earnings right now and how much they're making from AI chips at the moment, a year into this hype, and tell me that you think that on an exponential growth pattern that's going to persist for the next 5 years.
Remembering that they are a cyclical chip manufacturer.
Yeah,
So once
exactly,
they've
exactly.
sold all their products for a period, they don't have any more sales.
Yeah, so just I'm just trying to help everybody not be bag holders when they buy shares of shit because I mean the market's going up. I know some of you guys are probably thinking about going long because
I
remember
mean,
go up.
I'm long shit right now because you have to be, right? Otherwise, you're just losing money. But
It's not wrong. It's not wrong to be long. I don't think it's
yeah.
ever wrong to be long. You know,
But
it's fun.
I'm not permanently long, right? Like I've bought leaps on some tech stuff, and I'm not gonna let the yields pass me by, but I'm not gonna overexpose myself to anything, right?
Yeah, and you're buying stock in companies that are not adjacent to the hype.
Yeah. And
There's only
like AMD, right? Like I'm just selling like in the money spreads against, you know, like long calls that I picked up a couple months ago because fuck it, right? Like it's probably going to come down. If it doesn't, I lock in my gains, whatever. But if it does come down, then I'm in a great position.
yeah. So
Um,
just small side track on the whole thing, and the fundamentals of the economy and broader markets and all these things. I mean, like where we're at in the market is we're pretty freaking far ahead of ourselves. Um, and so I just, if you are going to go long, you want to have a buying plan in action and, have it be resilient to a soft landing, but still benefit from a soft landing or any landing. You definitely don't want to be buying into the stuff that everyone's foaming at the mouth to get their hands on.
I think alcohol's popularity has declined with the legalization of marijuana.
Correct.
Yeah. So I
Yeah.
think that's
Legal.
part of the reason is demand has declined. I still think alcohol is a good like recession depression hedge, right? But um, the demand has definitely declined, and some of that demand has moved over to the marijuana industry. Somebody asked earlier, fixie, like the rate of fixie increase to decrease in the spread leverage on the carry trade. I would say it's roughly like 0.75 to 1. So, if we expect the carry trade to decline like 100%, we could expect fixie to move up about 80. So that would put it around like 113. That's like a really wide range, and obviously the carry trade doesn't have to break down to that degree, but it very well could, right? So I would say that's probably about the max. Would be 100% decline in the carry trade, about 80% increase in fixie. I still don't like fixie a lot. It is getting a little more liquid, but I still think if you have the margin and the money, it's much easier to carry like yen futures than it is to and then you also benefit from the forward pricing of yen valuation as yen increases over time. Like it's going to have probably a big increase all at once that happens, but then it's going to have continuing price improvement over years, right? And I think futures and your ability to roll them is a much better way to get exposure to that. I know not everybody has the money to carry like FX futures, overnight, and the margin requirements are quite high. But Fixie's an okay supplement to that, but it's probably, unless you're buying shares, it's probably something where you would probably just capture that one large outsized move and miss out on a lot of the other, unless you exercise your options, which is possible. I mean, that you could do and then continue to carry the shares.
Yeah.
Should we talk about gold? I mean, gold's just kind of another indication of this risk off behavior, right?
Yeah, for sure. This is the world is ending hedge.
Well, I mean, personally, I feel that this is generally something that's propagated by central banks more than anybody else.
Yeah.
But yeah, I mean, since that same date, Feb 13th, where we start to see deleveraging in options, and we start to see deleveraging in the carry trade, and we start to see increased purchasing in forward volatility products, or long volatility products. We've seen gold increase about 10%, closing this week at a new all time high. I think that's its second weekly close above the all time high now. No, just the first one. This week marks the first week that it's closed above the all time high. This is insanely bullish for gold. It might not last long. Gold, big spikes in gold generally don't, but when gold starts to make a substantial move upward, it's probably going to make a very substantial move upward.
Yeah.
Now the narrative could shift. We could see yields rise, and if that happens, gold will come down. But if it doesn't, and a credit event happens, I mean, I don't even know. I don't track gold enough. But what's Peter Schiff targeting? Like
Infinity.
35,000 or 10,000 or some stupid shit.
Yeah, he's targeting, I mean, he honestly just he uses gold instead of dollars, and he's targeting global gold hegemony, really.
Yeah, so yeah. I mean, I know I've seen some other gold bugs that are targeting like 3,500, 2,800. I would say probably about half of their targets is moderately realistic.
Depending on how bearish you are, I mean, like Peter
You
Schiff is
yeah,
full,
you
full,
need to be
full
really
dollar.
you need to be really like long complete economic collapse to think gold would go higher than that. And if it were, there'd be no uh significant instrument or deep liquid market to trade it in, so it wouldn't matter, right? It's just a bag of fucking metal at that point.
Yeah, unless you literally have physical gold bars that you can go barter for something, because that's pretty much what you're assigning the value of gold at that point.
Yeah.
So, yeah, it's It's not. I think it does have potential to appreciate, but you know, I don't know about that much.
Fixie worth DCing into or just one buy? Time horizon, it's cheap right now. I mean, it's going to probably continue to improve in price up until the March uh, BOJ meeting. And then if that doesn't have anything, it'll probably pull back until the April meeting, at which point it'll start to go up again. I would say we're probably going to see Japan make a move by the end of this year, without a doubt. And so I would have a lot of theta on Fixie. I mean, I just expressed all the reasons yen futures are really good because of the just insane amount of theta you can get in that position. The same is true for Fixie. So, like, if you are long calls, right, you would probably say you're you go long calls at the money like 65, and Bank of Japan makes a big move and yen spikes and Fixie moves up, say it moves up the full range, it moves up to like 110. At this point, you would probably be best exercising within your capacity as much of your position as you could, and then capture continued gains in the yen over the next few years, right? So say it moved up another 20-30% from that point forward, right? That's just an example. Those aren't actual price targets, but that would be how you would capture that move with Fixie, provided Fixie doesn't get like squeezed out or blown up or something stupid, because it is an ETF, so it still carries all of that kind of market liquidity risk that other ETFs carry. I spend my days speculating gold. It's hard to move at high quantities. Yeah, it is. Yeah, gold markets aren't super liquid anyway, and then if you have the backdrop of significant economic collapse behind it, it would become even more illiquid, right? Even with the speculation. So yeah, I don't think those targets for like gold bugs have are realistic, that we're gonna have like a gold hegemony or anything like that. I think basically if you can no longer trade GLD, your physical gold's worthless as well.
Yeah, at that point, you'd rather be long alcohol, guns, bullets, food.
You want to be long anything because money in the market's just pointless at that point.
Right.
Yeah.
At least for the next 10 years.
Yeah.
Oh,
Yeah, Fixie's not bad for shares. Like I just said, like you can benefit a bit from the theta, but I mean your leverage is greatly reduced, which is what sucks. Anyway, let's do some projections for this week. So we're coming off the back of just some really fucking bullish JPOW shit. We were all kind of wrong about where the market would end the week, but I think I was most right about the path it followed. I was off on the close. We were all off on the close by a lot. Like we didn't have the breakdown from 188, right? We just had me and you both, I think, had 188. Let me check yours. It's a little harder to see.
yeah, you're hiding mine.
There it is.
You hit it on purpose.
It is on purpose. Just JFresh's doesn't even matter. He was further off than both of us.
Pretty decent resistance line, though.
Yeah, me and you were both pretty spot on. Although I do want to say that I did nail the top.
You kind of did, didn't you?
Yeah, like to the like within $1. That was pretty good. Anyway, moving on to this week, we've got CPI Tuesday, PPI Wednesday. We've got whatever reaction the market's going to take to Biden's comments over the weekend. We've got Japanese GDP tonight. We're going to have PMIs, PPI out of Japan this week. We've got, Jesus, there's a lot of economic data this week. It's going to be crazy. We got new yuan loans, M2 supply, out of China. So we're going to be probably at some of the time this week looking at Chinese lending facility rates again. Do we have any big auctions? We have a 30-year bond auction. We have a 10-year note auction. Yeah, PBOC 1 year is on Thursday, along with PPI. So Tuesday CPI, Thursday PPI. And then Friday, we have U.S. industrial production. We have all the industrial reports and import-export prices on Friday. And then Michigan consumer sentiment preliminary for the quarter two. Preliminary is the big Michigan report. That's the one that everyone really focuses on because the rest are just adjustments. But the preliminary one's the one that can have big impact. So yeah, a lot of data coming this week. What do you think, Dork?
I'm going to be straightforward this time. So open right where we closed. And then we close on Friday at 5,000.
Okay.
I think that with this much data, either the top is in, or I'm going to be just so wrong that everyone's going to make fun of me.
All right. So you're saying Friday close at 5,000.
Correct.
All right. Oh.
Boom.
Boom. And all right. I'm not entirely in disagreement with you, but I think Tuesday tomorrow actually. Hold on, let me start this. Tomorrow I think we open higher. At 51.40ish. Maybe move up to like 75 by end of day. Then I think down maybe back to 51.50 after the CPI report. Then the off day, I think we move up. I think that's where we get our 5,200 test. Oops. Son of a bitch. Ah. All right. Fuck. If we hold 50, I guess we don't hold 50. We lose the charm into the end of the week. I'll say 50-50.
All right.
No, wait. Am I too far off? I'm a day off.
You're giving
Son of a
yourself an
bitch.
extra day, I
Yeah.
see. Yeah, you're trying to.
Oh, hold on.
Be like, well, on Monday, I'm going to be more correct.
So I want this on Thursday. I want this there. Wednesday. Wednesday up. There we go.
What should we ascribe to Jay Fresh, who, by the way, said he was drinking with some buddies at the airport, so he's probably not going to make it.
Okay. There we go.
So what should we predict for JFresh? Straight line up to 52.50.
That's his usual prediction, right?
Yeah, I think
I'll just mark that, and then if he adjusts it, I'll put it in chat.
you'll
So if
make a
you like,
dot plot addendum.
yeah, if he, I can only assume this would be his prediction.
Me too. Like that's the only thing that makes sense.
You
Here,
know
make
what? I
yours
don't want
green
to
so
go.
I can take a screenshot and throw it on the Pores chat.
There we go. Boop.
All right.
I think PPI is going to be bad, so I'm bearish on that outcome. And then I think if PPI is bad enough, we slip charm, which would be right about there at the 51.50. And if we lose that charm going into expiration, that's going to be a really bearish Friday.
Yeah, if that happens, then OPEX is going to be fun.
Oh, yeah. Yeah, this line would continue out further. But I think pretty bullish into Wednesday. I wouldn't say I'm a mega bear. I mean, my end of the week is like what? Fucking it's I don't even think it's like what less than 1% below spot.
Yeah, I'm predicting a 3% pullback, and we're being called mega bear. Are you kidding me?
Yours is only 2.5%.
That's so reasonable.
What the fuck?
Fucking mega bears for that. Jesus, this market sure has conditioned us, hasn't it?
Yeah, it really has.
Ay. Well, I
Can
think
you guys quickly go over VIX futures correlation? Oh, it's
isn't
starting
it
to
beginning
break
to work?
down. So this should be,
Yeah.
I mean, really all you need to know about this is you should start to see a increase in volatility over time. And we have, right? We have since this has started breaking down. We've seen, vol move up very slowly, but the breakdown's very slow, right? This could accelerate, but we've seen vol picking up over this period. At our highs, vol is substantially higher than it was prior to this.
Yeah, and we'll see vol more particularly. We'll see vol get more unpinned.
Yeah, that could be really slow. That could be really really fast too. So that could kind of go either way.
Yeah, it depends on if we're close to a landing or not.
Are you reopening Vega puts this week? I have some already. Am I gonna add to that? Maybe.
Might be nice to do some sort of a long Vega overnight for the data prints, but the vol crush is gonna kill you.
Yeah.
Like even some sort of condor. Ew. Yeah. No.
Yeah,
I don't know.
I don't think my 1% move from spot is really contingent on me buying Vega positions. But markets don't crash till OPEX, right?
That's true. That's true. I mean, vol doesn't rise till SLD.
It's true. Yeah.
Well,
We aren't
yeah.
allowed red weeks. Didn't we just have a red week? Yeah.
It was a
It
week.
was red. It opened lower than it closed lower than it opened.
It was pink.
It was red.
Okay, fine.
It was red by 25 bips.
Ooh,
Yeah.
that's a lot of bips.
I mean, in terms of our prior all three of the red weeks that we've had in the last 4 months, it's not bad.
That chart is so fucking Stupid.
Yeah.
Totally healthy.
Yeah, I'm thinking we hold 50-50 this week though. I think we could, like, from a technical perspective, I think we could see a breakdown of the long-term trend, but we probably hold above 50-50. And then, we don't really have confirmation of like bearish reversal until we start to get down into like yeah, we need to get like down here around like 48-50 to really confirm that shit's correcting. So we got tons of range. I'm not worried about having time to get into positioning.
Yeah, I just felt like I don't think you're wrong. I just felt like being a bear. I felt like saying we were going to go back below the collar and everything was going to go to shit.
Yeah, I do think we will get another test of our high or possibly a higher test. Dude, how hold on, I was only $1.21 off on my high.
Uh,
So good. There's no historical precedent for that either.
so when are you going to get like a couple of ribs removed so you can fellatiate yourself over these things?
I don't need to. I have 600 people that can help me with that.
That's very true, huh? That's what the yurt's going to be, is you just sit in like a throne like Genghis Khan.
I
And just
mean, why else would I live in your yurt?
we just have a line of people coming in to just admire you and show you their appreciation.
This is, yeah, the pickle cult. The pickle cult compound. Slurp. All right, that's enough of all this. Dork, thank you so much for coming on. Jay Fresh, if you can hear us, we missed you.
Yeah, thanks for having me.
You got it, dude. I'll see you later, man.
Later.
Guys, I'll be around for the rest of the day. If you have any questions, hit me up on the Discord. If I didn't get to them on the stream. And then thank you all so much for tuning in. And I'll see you bright and early tomorrow. Pickles Picks will be out tonight. Later.